Hey everyone, thanks for being here on Decisive Talks. Right, I'm Henry Ho, and I'm an entrepreneur, digital marketer, and most importantly, a software enthusiast. Today, I have Sean Tapper. Right, he's the founder of Ticker. Ticker is a stock screener and educational platform all in one. So you don't just get to filter down the right stocks to purchase, but you get to also learn about investments and investing in stocks in general. So personally, for me, I know nothing at all about investing. I just know how to run businesses. I just know how to run marketing campaigns. And whereas I'm here to learn. My wife's the one that does the investment, so I'm pretty excited to have Sean Tapper here and just to learn from him what is the right way to go about starting value investing, right? So let me just bring on step Sean right here. Hey Sean, how's it going?
How's it going, Henry?
Hey, going great so far. There's been a lot of like um events going on right now actually. So
Sure.
and then the my son's childcare is closed like over the weekend for Thursday, Friday, and Monday as well. So it's gonna be a long weekend for me and for him as well.
Nice.
Right. So today is we're gonna have you to share with us about value investing, right, and how to make use
Mhm.
of Ticker to do that. Personally, for me, not for me, but my wife actually told me last night. I didn't even tell her that I'll be interviewing you today, but she told me last night that uh I used Ticker and I bought some stocks last Friday, and today is only Wednesday, right? In fact, it was she bought last Friday and she told me last night, which was just Tuesday, and she said she already made about, I think, like $1,500
Mhm.
with Ticker. So I was pretty impressed because I've already made all the money that I paid for Ticker itself, right? Again, I could pay for a couple of years down the road already, right? Uh,
Mhm.
so I'm really excited to learn a little bit more. I did do a read up, like the some of the educational content that you have in there. I do have an idea about what you're trying to do, and the reason why I bought into Ticker myself and actually allow my wife to use it is because I subscribe to the same mentality as you do, right? I believe in a long term
Mhm.
sustainable investment method because I feel that, like, let's say if you're getting into trading stocks and let's say people are buying into crypto and stuff like that. Yes, there could be very good upsides, but that's also higher risk involved. And at the same time, because of that risk, right, it is much more of an active income than a passive income, right? I myself, I believe heavily in passive income so that I can live a lifestyle
Mhm.
that I want, right? So I think time is more important than money. So we want
Right.
to be able to make money on its own, and then uh, be able to do whatever we want with the limited time that we have. So, Sean, tell us about yourself, right? Where you're from, and
Sure.
how did you get into investing, and why? What did you? How did you come across investing, and why did you decide to build a software like Ticker itself?
Yeah, thanks a lot for having me on, Henry. And I'm going to try to really simplify investing and give you guys a perspective that can make it a lot more fun than it's perceived. It can be, on the surface, seem kind of dry and boring. But I actually have a presentation I put together that does give my backstory a little bit.
Awesome.
And yep.
Yep. So,
So
do you want to put up your screen? You want to share slides?
I see the screen share. It looks like there we go. And let me
All
move
right.
this over. All right. Can you see my screen?
Yeah, you look, just as good in your professional photo as in person.
try to try to keep it together. All right, I'll jump into the disclaimer here. Just heads up to anybody watching. If there are any specific stocks mentioned on this webinar, please do not buy or sell stocks based solely on what you hear. Please do a full analysis, a 4M analysis, we call it at Ticker, which is you look at more than just the numbers, but we'll talk about that in a moment. But yeah, I'll jump into my background a little bit. So I'll give you a little lay of the land here on the topics we'll be speaking to. So you'll learn about my background, how it led to Ticker. We'll talk about some of the investing myths. Then some of the hot topics here, which are why do investors lose money in the stock market? How do you reduce the risk of losing money in the stock markets? And how do you get started if you're a beginner? And then the last one is we'll touch on the number one strategy for building wealth. So my background, I'll try to keep this pretty short and sweet, but I've got about 15 years in software engineering, primarily served as a project manager. And then the last 10 years, I've done a lot of angel investing. I'll dive into that in a second, but here's a good timeline that lays things out a little bit. So with software engineering, the first 5 years were really a struggle. I had an agency, did a lot of work with small and mid-sized businesses, and really grew that through the recession. It was by no means a lucrative operation, but I worked with or proposed to about 500 different small and mid-sized businesses over here on the left. And years after this company ended up, we went through a merger, and it was nothing like a big liquidity event where I had a bunch of cash left over. It really was an opportunity to have a fresh start. So debts and liabilities removed. But anyway, it allowed me to look at, analyze, and understand a lot of businesses. And I didn't realize it at the time, but that ended up being a really good training history for investing. So after that small business, I got into contract project management. This seemed to be a good fit the last 10 years. And I got to work with a lot of larger businesses, so some public businesses, GE being one. But yeah, that's a quick overview of my career history.
Awesome. Just let me just bring up the full screen instead. I think
Sure.
people could see better, and I'll just take myself. I'll be sitting in the background listening and jump in whenever I have some questions for you.
Perfect. Yeah, let me know when you're ready, and I'll continue.
Yeah, you can go ahead right now.
Okay. All right. So first off, I always like to touch on what kind of mistakes did I make? In this way, you guys can learn from those mistakes. So with angel investing, and there's nothing glamorous about it, angel investing is the strategy investing in private businesses, not public businesses like the stock markets. In my first business, I thought I had the experience, like, hey, I know how to build a business, and I'm a big fan of tech, and I'm going to invest in a tech business and watch it grow and then sell it for 10x multiple. Well, let's be honest here. That's a lot easier said than done. So with angel investing, here are some of the issues. You have limited financial data, if any. These are typically new businesses I would invest in, like a new tech startup or new business idea. There usually are a lot of competitors, which is a problem. And then leadership, whether it's somebody I know or even myself, like, do these people or did myself have experience building a public company? The answer to that is absolutely not. So learned a lot through, I would say that was 2010 through 2015. And my returns were about break even. So to go 5 years and not make any returns, that's a losing game. And I knew if I kept this up, this is not going to be looking good for my future. So I had to make a change. So I turned my attention to the stock market. And what I did is I first turned to some of the more popular and well-respected investors are investors such as Benjamin Graham, Warren Buffett, Charlie Munger, and my mentor at the bottom here, Phil Town. And their investment strategy is all based around value investing, and we'll talk about that in a little bit. But
Can I jump
yep,
in here a little bit?
sure.
So when you mention Phil as your mentor, do you mean that you actually learn under him, like
I, I've
personally?
I've never actually had a conversation with him, but a lot of his material and content, I've considered him my mentor from a distance. So
I understand.
yeah,
No worries. Just
yep,
wanted to find out from you if you ever actually spoke
sure.
to him.
What was really cool is when I launched Ticker, I did do a quick shout out thanking him for the input going into the platform, and he did give me great feedback coming back. He just pretty much said congratulations, and that was the end of it. But really nice guy. And speaking of, let's dive into why I gravitated towards Phil. So when I first started looking at the stock market, I started looking at other screener platforms, which are essentially tools like Ticker that find stocks for you. And I wasn't generating really any kind of results that were worth talking about. There's a lot of garbage out there. And when I found Phil, things were a little different. And the first thing that really caught my attention is like, here's his backstory. And I'll give you a little more context here and other details. But the guy served in the military, and then he started earning $5,000 a year as a river rafting guide in Colorado. That's not per month, that's per year. And he is very much living off the land. But he's an outdoorsman. I'm an
Yeah.
outdoorsman,
So
right?
how much is that roughly in today's context, right? Like $5,000 a
Oh
year.
gosh, in the 80s, that's I don't know. My conversion is going to be bad, but it's still very much minimum. It's below
Oh,
minimum wage.
it's still minimum wage. I see.
Yeah,
Thanks for the context, right?
yeah, it's definitely even below that. Like I think he was actually driving a motorcycle and living out of a tent, so living very much off the land. But the thing that I really gravitated towards is he's an outdoors guy. I enjoy mountain biking, kayaking, fishing. I love the outdoors. So that caught my attention. Another detail that caught my attention is he turned $1,000 into over $1 million in 5 years. Now, I'll talk about how he did that at the end. And then the last point here is he drives a Dodge Ram. This is a very basic, modest vehicle. And this relates to with Ticker, we teach you to look at more than just the numbers. We teach you to look at the business, and we also teach you to look at the leader. So when you're looking at a CEO, you want to invest in somebody that has really high integrity and they put their customers first. So I'm sure we're all very aware of fake gurus out there on YouTube standing in front of private jets and Lamborghinis. Like these are prideful boys. These are not leaders. When we look at CEOs, we look at people they don't place a high emphasis on needless things, you could say. And Phil caught my attention because he's very much he's a modest, down to earth guy. These two books
So
he wrote.
before we move on, right? I
Sure.
just have a
Yeah.
question as well. So what kind of lifestyle do you lead? Do you lead then? Um like do you like what is the most luxurious item that you have purchased probably? And what is your day-to-day life? You know, how do you spend and like maybe
Sure.
expenses and stuff like that?
Well, yeah, I'll give you a little context. I love fitness, so I usually start my day. I head to the gym. I enjoy CrossFit. I really I like working, but I don't love it. So I work about 40 hours a week. I try not to work more because I really like a lot of hobbies outside of work. Like I said, I like to be outdoors, especially during the summer months, summer in Wisconsin as we speak. But as far as like owning stuff, I do have a pontoon boat because we have a lot of lakes here in Wisconsin, but pontoon boats you can get those pretty cheap. So I don't own a lot of tech. I'm not like a gadget guy. Yeah, I don't gravitate towards like things like, and this is a lesson somebody taught me years ago. Most things, especially the more metal or aluminum in the thing, the more they depreciate. Like automobiles, they depreciate really fast. And when you think about it, a lot of things that own a lot or contain a lot of metal, this sounds weird, but they do depreciate fast. So I like investing in things that appreciate. So I've got a regular size home. I've got a just shy of an acre here, a backyards that butts up against the woods. I've got deer going through my backyard. So I'm very much, you think of Wisconsin, I'm very much your stereotypical, like I've got nature all around me. So that's my kind of life.
The only thing that I know about Wisconsin, right, is that 70s show.
Oh, yeah. Nice.
Yeah.
Nice.
So I guess you are more like a more towards the thrifty end of the there are like
Mhm.
two people are a little bit different, right? So some people are really thrifty and some people are quite a spendthrift. So like
Mhm.
I guess you're more towards living a more modest lifestyle, just like
Right.
Phil Town, your mentor, right?
Absolutely. I try to, I like traveling. I like experiences more than things, but even when I do travel, it's all about, finding deals, right? You can find hotel deals, flight deals. There's all kinds of deals out there to travel. So I do place a higher emphasis on that. I like good food, but I like you could call me kind of a pseudo grill master. I like grilling a lot. Um, so
Awesome.
yeah, yeah.
It's all about getting the best bang for your buck, right?
Yeah, right. Yeah. So, real quick here, you guys should write down these two books, Rule One and Payback Time. And I highly recommend both. They make investing really approachable. He really breaks it down, easy to understand, and really serves the retail investor. Retail investor is essentially regular people like you and I doing their own investing. So check these two out. He does have a third book out there called Invested. I think he wrote with his daughter, Danielle. I haven't read it, but I'm sure it's great. But do check these two out. And about 70% of the math, the calculations that went into Ticker are actually from these books. So yeah, definitely check them out. So the big question here is, and this is something I knew about stock investing, especially Warren Buffett, is he's made comments that if he was just managing a few $1 million on his own, he obviously is a billionaire, but if it was a much smaller number to him, he could make consistent returns that are close to 50% per year. And the question is, how are they doing that? And I know, these are not gambling men. They don't guess, they don't use emotions or feelings when they're investing. I knew that right away. So that led me to the conclusion. I'm really applying my software engineering background, is process of elimination. If they're not guessing, what are they doing? Well, they are using math. So what I did is I started deep diving, like I said, other screeners, trying to reverse engineer how they were coming up with their calculations. And I found that a lot of the math that goes into a lot of screeners and what gurus are recommending is very limited. Like they're only using a few data points, but Phil, his books, it pulled more data or referenced more data points per stock than I've ever seen before. And I kind of knew, I'm like, okay, something's different here. It's much more thorough. So I started putting together all the calculations within Excel, and I wanted a way to, one, beat the market consistently. I strongly believed I could, and I did, and I'll go into that in a moment. But the big win for me is time. I didn't want to spend hours, if not days, analyzing stocks like a lot of people do. I've got enough hobbies. I'd rather be doing those things instead of sitting at a computer. So what this first version did in 2015 or 16, it allowed me to analyze a stock in about 5 to 10 minutes, and that was fine. It still was time-consuming process, but I did that for about 4 years, and I just wanted a way again to make good returns on the market. And then what happened is in 2019, I started talking to other retail investors like us, as well as some larger institutions, as well as some financial advisors. And everybody across the board said, hey, you should turn this into a tool to share with others. So 2019 came around, started building the tool. It took about just shy of a year. And the first version went live last summer, 2020. And then we launched the newest version, which is live today, this last July, 2021. And that's what
Yeah,
you see here.
I just want to comment the new UI is just beautiful, right? I mean it's such a new refreshing design from the old one, because I bought in when I mean I subscribed into Ticker when you guys just launched, right?
Yes, nice. Well, I'm glad you have perspective, because the first version I was told was like a flashback to 2007.
Yeah, I would
So
say so.
we knew we had to make some changes. And the new version, the big win is, a lot of you guys, a lot of people that use Ticker provide great ideas. And that old version was just, it took so long to add features. And I'm like, if we want to do this right, we've got to create a new tech platform that allows us to bring your ideas to life. So it was a really big win for us, and then of course for our customers. But I have to give a shout out to Elgar, who's the key driver behind the tech, as well as Masi and Nitesh. They're our tech team, very talented guys. So they've done great work.
Yeah, I've spoken to Elgar before. He's really passionate and glad to work with you to bring Ticker to a different level here.
Yeah, it's been a real pleasure working with the guys. They're awesome. So let's dive into my returns. These are the returns over the last 5 years, and what I did is I compared these to the big benchmark in the U.S. is the S&P 500 index fund. So that first year, 2016, I made 15%, and I kind of was skeptical of my own calculations. I was like, oh, maybe it's a fluke. Let's just keep using this and see where we go. 2017, you can see I made 16%. I was very happy with. The S&P was actually better that year. It was 19%. But 2018, things got interesting. At this point, I was confident with the calculations and what I was doing. I actually sold my index funds and ETFs. So get rid of those because they're actually holding me back. And not saying that you guys should do the same, but when you figure out that, investing in the stock market is all about finding really good businesses, safe businesses, financially sound businesses, you can make a lot more. So I made 80% that year compared to -6 in 2018. 2019, I was a little better than S&P at 35%. Against 28. And then in 2020, this is where things got really interesting. So 2020, we had COVID. The stock market dropped by about 30% in March of 2020. And that's, we'll get into what this is called in a moment or in a little bit, but that's where you make your big returns in the market, is when everybody's fearful is when you should be greedy. And Ticker teaches you how to buy great stocks as the market drops. So I literally followed Ticker, market dropped, and I just kept buying some great businesses. And when they quickly turned around, my returns were, I was up like 60 or 70% by summer. And then by December that year, I was already at 120. So years like that aren't going to happen every year, but when something does happen, like a big pullback, you can consider it, as one of my friends calls it, consider it a gift. They don't happen often. So let's dive into some of the myths with investing. So myth number 1 is investing is gambling. The reality is trading is gambling. So Ticker is all about value investing. Now you can, if you're into trading, you can certainly do that. Trading is the strategy of buying a stock and selling it the same day, or you could buy it today, sell it tomorrow, or a duration thereafter, such as 30, 60, or 90 days later. That's called swing trading. So you can do day trading or swing trading. It is highly risky. So let's break this down. So trading, you are working for money. It's a job. It is high risk. You have to spend. I do, on my podcast, I did interview a guy who does futures trading, and he spends about 12 hours plus per day. It's a lot of work. It is a job. It's not
Yes.
passive income.
Yes,
Yeah.
I do agree with this. I'm not a trader myself, but I know people who does trading for a living, and they pretty much they quit the job and do trading for like full time, and so they are really spending a lot of hours doing this. It's literally a full time job. I I
Yep.
would say,
Yep.
yeah.
Yep. It is a lot of work.
So
And
if
for
you
people,
if you want to get out of a job, then don't I would say don't get into trading because you are getting yet into another job where you're just kind of working for yourself, right?
yep. Yep. True. And it's very risky. I didn't list it here, but about nine, and I have an article on the Ticker website, talks about over 99, it's close to 100% of people who trade do lose money. Trading is it's a zero sum game. There is a detailed article I put together is somebody is winning but somebody is losing at the same time, whereas investing, I'll give you the pros here on the right in a second, but investing everybody can win. Like you, me, a bunch of our friends, family, we can all invest in a great business. While as that business's share price increases, guess what? We all win.
So
Um,
sorry, could you give the number again? Like you were saying
hmm.
like a certain percentage of people who does trading lose money.
It's 99%. Yeah.
99%. Wow. Okay.
Yeah. Yeah.
That is
And
really gambling, right?
and I think I do try with a lot of the articles written on Ticker, I do try to cite the sources. And I believe that source is either from a LinkedIn author or Forbes. So one of the two sources there. Yeah. One detail here at the end is when you think about traders, ask yourself the question, how many billionaire traders are there? Well, if you do your homework, there are 0 billionaire traders. Not saying you and I or anybody's going to be a billionaire, but it shows that you can't scale that type of business. Let's break down investing here. You flip the equation, first of all. Money works for you. So, like you, Henry, you love passive income. You love when money is coming in and you're not working for it. That's a great business model.
Definitely,
Investing,
right?
it exactly compound interest is working for you. That's what you want. And the stock market, there's nothing as scalable as that business model. You put money in, and as businesses grow, you keep making more money. It is low risk. I'll break down how do you reduce risk in a few moments here. It doesn't require a lot of time. You leverage a good tool, a good platform like Ticker. You can spend about 15 minutes a week and you're fine. You could spend 2-3 hours. That's okay too, but you don't have to spend a lot of time. It's highly consistent. I can attest to that. I've been doing this for years. It's about buying safe businesses. And then I did my homework on how many billionaires are there in the world. There's over 3,000. The majority of them have done some sort of investing. That's how they built their wealth. Myth number 2, investing is only for professionals. This will be a fun one for you guys. So the retail investor are growing really fast. Let's break this down. 2010, and these numbers are in the US, and I'll give some numbers here in a moment globally, but 2010, about 10% of the market were composed of retail investors. In 2020, it was 17%. And through COVID, because it forced a lot of people to stay at home and spend a lot of time on the internet, they started getting curious about, hey, what's this investing thing? Maybe I can take this on. Well, that's up to 25% now. It's growing really fast. And what is the reason? Well, check this out. 2 reasons. Number 1, YouTube. Number 2, podcasts. It's making it really easy for people to learn about investing. That's why it's growing so fast. All right, myth number 3, investing is complicated. It's easy if you can control one thing. Henry, any guess on what that is?
Don't lose money. Okay.
Your emotions. If you guys can control your emotions, it's actually very easy. So this transitions right into this next point. Why do investors lose money in the stock market? They don't manage their emotions. They listen to bad advice and they sell when the market drops. Most businesses that are in the stock market, they go up more than they go down. I actually did a webinar, gosh, could have been a month ago, with a guy by the name of Ryan Sterling. He's a financial planner, and he actually works in the industry managing people's money. And he talked about that most businesses are going up more than they go down. And it's really the discipline of not freaking out when the market drops, not listening to some guru or some news source or jumping on Reddit. You have to tune all that out. You have to control your emotions, and you have to tell yourself that you're not investing in stocks, you're investing in businesses. And when you're investing in businesses, we teach you at Ticker to look past the numbers. And you want to look at businesses that are solving problems, removing pain in people's lives, or providing value. You're not gambling. These are businesses. So keep that in mind. And if you can make an investment and stick to it, you're going to make consistent returns in the market. How do you reduce risk? So what you want to do is, and we teach people at Ticker, you want to look at the total financial health of a stock, and that's what Ticker does. And I'll give you a demo in a moment to show you how it does that. And then you don't, like I said, you don't want to just look at the stock. This is one thing. This is where a lot of people, and I love jumping on Facebook and Twitter and Reddit and all these platforms, you'll see people giving advice and what they think. And all they do is they look at the numbers. They'll look at something like, I won't go into too much detail, but they'll say like the PDE ratio looks too high, or the market cap is too large or too small. That's all noise. It makes no difference. You have to look past the numbers. Ticker does the hard part and takes care of the math and the numbers for you, but you want to go a step further and think about, what kind of business are you investing in? Is this a business that's going to be around in 10 years? Do they have a good competitive advantage against the competition? And are they led by somebody like a Phil Town, that somebody has good integrity? They care about their customers, and they care about solving problems. So I want to break down here, if you are interested in getting started, here are a few quick tips for you. So number one is ticker.com it's essentially a blog as well. It's not, there's the actual screen or platform you can get access to, but we've got a ton of free content. We've got an onboarding guide. It's like 21 steps that really step you through A to Z. Makes it super easy. There's a bunch of blog posts. There's a lot of great content there that'll get you up to speed really fast, actually. I try to write a lot of the content in layman's terms language. So I try to remove complex financial terminology and just break it down for you. So definitely go there. We've got a YouTube channel. I'm starting to put out more content there. Ticker, super easy to join. And Henry, it sounds like you and your wife are using it. We try to make it really easy to use. It's one of those platforms that it's not noisy, it's not messy. I've used quite a few financial platforms that are really hard to use.
Yeah, to be honest, we actually got into Ticker like a couple of months ago, but my wife and I have always been so busy because now that we are all working from home, right? What happens is, if you have a full-time job and you are working from home, technically you are working all the time. Right? So we didn't really have time to get into it. But I did, try and push her into making use of Ticker a couple of times, and then she finally got around it, I think about 2 weeks ago or something like that. And then she made a couple of investments last Friday, and just like what I mentioned earlier before we started, was she has already made $1,000 overall. She's already made about 10% in returns, right?
Wow.
In gains, and that's just like a couple of days, which was very impressive, I would say.
That's amazing. And just to emphasize this with the audience, that's really short-term results, and we try to think more long-term, over months and years, but to see those kind of results in a short time period, that's awesome. So thanks for sharing.
Yep.
One last point here is, when you're investing, you want to start small. Your number one objective is just to get confident. Get $100 in, a few $100, $1,000. Just start playing with the platform. And as you continue to use ticker and you continue to invest, see returns, your confidence will increase. All right, let's touch on that strategy going back to Phil Town, turning $1,000 into $1 million. How did he do it? Well, that strategy is called stockpiling. In the ticker onboarding, there's the 21 steps. Everything leads up to point number 21, which is all about stockpiling, which is buying your on sale stocks when they fall. This is like what happened to COVID. I know people, I wish I would have knew this back in the 2008 recession, to have cash on hand when the stock market falls. That's when you want to buy. That's when you make your biggest returns. So when the market is going up consistently, you'll do okay. Like you saw my returns. There were years where, the S&P 500 did do better than me, but most years I have beaten the market. But when the market does fall, that's when you really crush it. All right, what I'd like to do is transition to a quick demo of Ticker. I'll show you some of the cool features.
So, before we dive in, right? Would you say that there will be a lot of probably like new millionaires created just before the the COVID recession ends? Do you think that a lot more people are going to be richer because
Yes.
of the the pandemic opportunity, I'd say, and people are capitalizing on that, and just right now we are going through that vaccination phase, and I think like the economy is going to slowly, gradually recover, and a lot of people are going to be richer because they invested early,
Correct.
probably like last year. Do you think so?
Absolutely. This happens all the time for numerous reasons. I'll just summarize. So you hit it on the head. Is the market's doing really well right now, but I know people who have done very well, in 2020 because of that pullback. But as the market continues to increase, yes, people are going to build more wealth faster. Another thing to consider is when things like this happen, like you think about 2008 recession, new business models come out. Industry changes. Well, we're dealing with that right now, especially with work from home, new businesses, new business models, new solutions to problems are coming out, and people they're capitalizing on it. They're building wealth in new ways. It's really exciting.
Okay. Just a curious question that I have is that will Ticker then be able to tell us, let's say, the market is changing, there is a looming recession, so that we kind of pull out at the right time and then jump in when it's at the on sale, where we get more on sale stocks to go into? Or do you recommend like or do you have a different strategy altogether, like a different approach?
Yep, I'll be perfectly honest with you. No person or software platform can predict a recession when it's coming. I'll give you some examples here of conversations I've had with people who work in the finance industry. But I'll just say this: Ticker won't predict when a recession will happen, but when it does, it will guide you to the right stocks that you should buy so you can really capitalize. And that's exactly what I did with COVID. But get this. So since 2017, experts, and I use quotations on this, experts in the finance industry have said this is the year. 2017 is the year we're going to see the biggest crash we've seen since 2008. Guess what happened?
Yep.
No crash. 2018, same thing. 2019, same thing. Every year is quote unquote the year. And at this point, I just sit back and laugh. I'm like, okay, all right.
Yeah, I had I heard the same thing again, because they say like every 10 years there would be a recession, right? So 2017 was 10 years after the the recession, the previous recession, and then they were saying that okay, 2017 is going to be the recession, and then nothing happened until just last year, right?
Right. Yeah, and we had a pullback. It wasn't even considered a recession by the length of its downfall in the market. But a lot of people don't know this, but Australia has gone 30 years without a recession. So is it possible for a country like, let's say, Singapore or the US to go a long duration without a recession? Absolutely. But you need to be prepared for when pullbacks in the market happen, and Ticker teaches you how to do that, especially through the onboarding. Keep your eye on sale stocks when the market drops. Simple enough is when you buy some great businesses. You want to get a great deal and watch those stocks turn around.
Yeah. So you're saying that we can use Ticker at any point of time. We just follow some of the stock picks and purchase the on sale stocks. And when the market drops, right, there will be new opportunities, and we should just move our our portfolio into a different set of stocks that are actually on sale, right?
Correct. Yes.
Awesome.
Yep. So I'll give you guys a quick demo here, and then we can jump into some Q&A because we certainly have time for it. So with when you log in, you get to the Explore section. There's a lot of fun different tabs here, like your top price changes in the market, top score changes. I'll define that in a second. Most popular search stocks, like out of everybody using the tool, what are they looking for? So some cool features here. But the main button is really the stocks page. You go here, it lists all the stocks we have in the platform. We have a little over 20,000. We are a global tool, so we have stocks from Singapore, Indonesia, India, all over Europe. Of course, we have the US and Canada, Australia, but there's a lot of other smaller countries out there that they definitely have stocks in here as well. So I want to draw your attention to what really makes Ticker different. So we have a very easy to understand rating system. A stock has a summary of either on sale, watch, or overpriced. And how a stock is classified as on sale is if they have a score of 10 or higher. The maximum score you can have is 20, score of 10 or higher, and a margin of safety of 50% or higher. And I'll quickly define what that means. So the score is the overall financial strength of a stock. The higher the score, the safer the investment. And what it's doing is, what we do is we look at all the financials. So we look at the income statement, cash flow statement, balance sheet. I'll briefly touch on the income statement because some of these numbers may be most familiar, but it looks at the revenue growth rate over the last 5 years. So how are the revenues doing? Are the sales doing? Are they increasing? If so, that's great. If not, that's not good. Looks at the net income, that's the profitability. And then it looks at the EPS, the earnings per share, which is a key metric for stocks. But it likes to see that all these metrics are increasing. And then when you jump over to the margin of safety, what you want to do is you want to buy stocks at a discount. It's also called a discount off the sticker price. So here's an example. Let's say you find a stock that has a sticker price of $200. Sticker price is the real value. It's the intrinsic value is another way to phrase it. It's the real value of a stock. And you never want to buy something at full price. You want to buy it at a 50% discount. So in this example, if it's a $200 sticker price, you want to try to buy it at $100 or less. So Ticker, of course, does the hard work for you, and it's looking for stocks that have a margin of safety of 50% or higher. But that really rolls up to, if you got that score of 10 or higher, margin of safety of 50 or higher, you get an on-sale stock. Now, most stocks will be overpriced. Just keep that in mind. It is fairly hard to reach on-sale status. Within this table, you can filter by any column you want, like country. You can filter by whatever country you'd like here. Let's do a quick example. I'll just do Singapore. Apply. We'll refresh, and the bottom will show the new count. I think we've got about 646 stocks there from Singapore on its own. You can reset your filters. You can create your own watch list. There's these little check boxes you can click, and you can go over here. You can add to a watch list or create a new. With the watch lists feature, as you add stocks to your watch list and those stocks change, that summary changes I mentioned here between on sale, watch, and overpriced, you will be notified. It's kind of like the set it and forget it feature. You can also see, depending if you're a pro user, you can see what I invest in. This is the put your money where your mouth is feature. This is like, if people want to see what I invest in, they can go here. It shows what I invest in and why. I actually break down the description here. So you can literally follow me if you're interested.
Yeah, and to be honest, this is one of the reason
Mhm.
I got thicker, right? Is because you put your money where your mouth is, right?
Right.
And I highly believe in that, because a lot of people out there, there are a lot of gurus out there on the internet that shows their Lamborghinis, and to be honest, they are rented, and they have mansions, right? That that they have a mansion with hot babes and stuff like that, and they are all
Mhm.
paid actors and
Yes.
rented mansions, and they try to claim that they own them, right? So I never believe in them.
Right.
I and But I see, like, you put your money where your mouth is. I think that's really important, to, like, because you are very transparent, right, with
Mhm.
what it's with everyone who actually uses Ticker as well.
Yeah, thank you. I appreciate that. That's that you hit a key word there, is we're trying to be transparent. Finance, money, it can be an emotional thing, and there can be a lot of fear around it. And it's like, you know what, if we're going to do this right at Ticker, it's like, let's be transparent, let's be real, let's be different. So we're all about transparency.
Yeah, so we got a comment coming in here. Casey, right? He's one of our active community members. He says he loves the new UI UX of Ticker as well, right? Really happy to find stock picks from the Malaysian Stock Exchange.
Nice. That's great. Yeah. Is that Casey Wong?
Yeah, that's Casey Wong. Did you
Yeah.
see the
Shout out.
comment? Yeah.
Yeah. Hey, buddy. Good to hear from you. He's been in contact with me offline quite a bit. Good guy. But I'll continue going through here some of the key points. We'll just click on one specific stock, and I'll show you one other detail that's pretty cool. Is we have this chart here that shows actual points in time when stocks change between on sale, watch, and overpriced. This is kind of like the proof in the pudding. You can see in most cases when a stock changes to on sale, it should go up. When it changes to overpriced, it should go down. Of course, not always, because there may be circumstances like, let's say it's a legal issue, or a CEO at a company does something stupid, maybe a irresponsible tweet, for example. So there are things that can cause stocks to go another direction, but typically you will see these trends happen. So it's kind of cool. You can see the points in time as they change. And I like to see when stocks change on sale, and are they going up thereafter. Here's a cool feature. We break down in layman's terms the score, so you can really see how these scores were arrived, and you can click these little drop downs to read. I try to make this as concise and to the point and understandable as possible, so you can understand like ROIC, equity growth rate, EPS growth rate. But this is the reasoning why a score is the way it is. I would like to point something else out here on ticker.com. I did mention this is all free content. There's this education tab. You can click the tips to get started. And we have our calculations here. For those who don't already know, you could literally, if you wanted, you could go here, read the calculations. And if you were ambitious enough, you could build your own version of Ticker. We try to be extremely transparent. So if you want to know why or how the math really works behind Ticker, go here. This is a fun read. We have the podcast, we have some downloads, some other fun stuff here, but check that out. We have webinars going on all the time. I try to do free webinars so you can guys, jump on events like this and learn as you go.
Yeah. Just to interject a little bit, we got another comment from Casey here. He says, "Thanks, Sean Tapper, for the complimentary copy of Ticker. Really appreciate your generous gesture from the bottom of my heart." Right. That's a very nice gesture of you. We've got some comments. For because there's another investment software that's out there as well. So people are really curious about that, but we'll bring up those questions later. We have a question here from VJ. He asked, does it work well for the Indian market as well? Right. So, yep. Do you want to comment on that?
Absolutely. So let's jump here to, we're going to go to India. I think we have about 1,400 stocks from India. And yep, just over almost 1,500. So what Ticker does is it looks at every stock around the world exactly the same. So it doesn't care what country or what the market cap is or what industry it's in. It's looking at the growth rates between the years and quarters on those financial statements. So it's looking at, and I'll give you guys a great example here. Let's an Indian stock I'm familiar with is Infosys. I think it's INFY. Yep. What this stock is, it's a management consulting firm, I believe. And let's look at some of the trends here. This financials tab really gives you guys a good picture. You could read financial statements on your own on any free site like a Yahoo Finance or a MarketWatch or investing.com, but go here, you can see it in visual terms. You like to see the increasing. Right now it's on years. You want to see those increasing revenues, increasing net income. Same thing with earnings per share. You jump down to your cash flow statement, you got your free cash flow. You want to see that increasing. So we're seeing a lot of good signs here with Infosys. This is great. So it's looking at the growth rates between those years and quarters for every stock. So just keep that in mind when you're investing. No, it doesn't matter where a stock is from. It's getting the same look from Ticker. The same algorithm is applied. I'm just taking a quick peek here at assets. Seem to be a little level. Equity is it does increase there at the end. But anyway, you can see some of these points here. We like to see liabilities decrease, and we like to see debts decrease. Looks like we had a pretty big increase there. So that's why you can see this does check out. Score is not bad, 12 out of 20, but margin of safety, we don't have a big discount there. So yeah, keep that in mind. Any other questions jumping up there, Henry?
Yeah, he commented, wow, 1,400. Wow. Yeah. So Ticker has all those. I see, we've got some questions with some other different, like they're asking about comparison questions between Ticker and others investment related apps. So I think I will leave that towards the end. Once you are done showing about Ticker itself. I have a question from myself, is that do you recommend certain stock markets to go into, and maybe some that you would try to stay away from? Because when sometimes when there is a big recession, like for example in the 1997 Asian financial crisis, so what happens was there are a few countries, not to badmouth the Malaysian people in here, but for example in Malaysia, I believe that during that point of time they actually stopped money flowing out of the country, so you can't actually liquidate, or if you can liquidate, the money is actually stuck in Malaysia itself. I something like that. So is there like maybe certain markets that you would recommend not jumping into?
I have nothing bad to say about China, but I know that Phil Town and other well-known investors have made comments through the years that there can be reporting of financial statements and they're not exactly accurate. Now, there are some bigger businesses out of China that are doing things correctly, but there's a lot of like more mid cap and small cap that you could call it cooking the books. So there could be falsified information on financial statements. So they have warned that just be careful. Now in the U.S. and Europe, regulations are really strict. There are heavy fines if you do report fraudulent statements. So just keep that in mind. If you can gravitate towards markets that are a little more strict, you're going to get the real number. So just be careful. Some countries might not have as strict regulations.
Right. And also I think with China, it's the way that they run the country is a little bit different, right? Because there is a recent news where they actually ban all tuition for core subjects. So like a lot of educational tuition companies, they had to roll up their shutters. So I guess there may be some other markets that may be less what do you call it? Less fluctuating, I would say.
Sure. Another thing to keep in mind too is when you're using Ticker, you may look at a lot of stocks from your country, and if you see a lot of overpriced, don't be alarmed. You need to ask yourself the question, like, are these businesses you're looking at, are they able to scale globally? Are they global business already? If not, can they scale globally? Like the businesses that are in my portfolio, you probably notice Microsoft is in there, PayPal is in there as well. These are businesses that can scale globally. This one of those deals where you're looking past the numbers and the ratings, but you're really thinking about the type of business model. I got a fun story here to share because I have met a few investors that they got upset. They're like, I can't find a great on sale business in my country. And I had this individual, okay, share with me, what kind of businesses are you looking at? And they all felt like small businesses, which is fine. And here's an example. Let's say you want to invest in Mike's pool supply company. Mike is a great guy. He's got a family business down the road with 10 employees, and they sell cleaning chemicals for pools and spas and hot tubs. And then on the other hand, you have Pool Corp, a global company. They have the infrastructure, they have the people, they have the technology, and they have the money to scale globally. Now you got to ask yourself the question, do you want to invest in a local business or do you want to build your wealth? Because they're two very different questions. And you need to think about, like, if you're going to build your wealth, you probably should look past the walls of your country. Like, look outside your country and see what other businesses are out there in other markets, and think about the type of business model it is. Can it scale globally? Because at the end of the day, we're all, as investors, we're looking to build our wealth. So if you do see businesses that are in your country that are overpriced, look at that business model and ask that question if it can scale global.
I see. So would you gravitate towards like tech-based deals, tech-based stocks, because they're a lot easier to scale, right?
Well, my background is tech, so I tend to gravitate there. But there's finance businesses, there's manufacturing businesses that can be, they're global. So definitely don't think just tech, but think about what kind of businesses can scale to that global level. Do they have the infrastructure? Do they have the employees? The resources, the money, the whole, like everything. So you might want to do a little homework there as well.
Right.
Yeah.
So do you want me to bring up some questions in here?
Let me jump to, I've got one more slide here for you guys to think about. There is a offer right now, and you can certainly ask Henry, anybody in the call here. He's got a link he can send you, but we have an offer going right now, 20% lifetime discount. It's not just for 1 month or 1 year, but you can use the coupon code value2, expires in like 2 weeks. So keep that in mind, write that down. If you're interested in giving Ticker a try, of course, Ticker has a 14-day free trial anyway. So you can get in, play with it a few days. If you like it, great. If not, no worries. All right, I'm going to close my browser.
Yeah, the link for
here.
the for Ticker itself is on the post itself, so you guys can actually click on it and apply the discount, right? So we have a question here from VJ as well. So VJ asks, is there a guideline for the type of stocks listed here, the top 1,400 from India? I'm not really sure about his question here. I'm not sure if you understand what he's trying to ask.
Is there, well, the guideline, I would say that when I think guideline, I think of the onboarding guide that really applies to all stocks, no matter what country you're looking at. Then that's that ticker.com. Go to onboarding and you'll see the 21 tips. That guideline is go there. That if you want to invest in those stocks from India or any other country, that's your go-to.
Yeah. So the so VJ, right, the idea behind Ticker itself, it applies to all kind of stocks, right? The only time that Ticker might not work so well is when the financials that are presented is not accurate, which is, like what Sean is was saying, that some companies may cook their books, so their accounting might not be accurate, and then you will not be able to then then it might not be accurate for you to make a proper judgment. So I would say that as long as there is strict sort of guidelines in the stock market of your country, then it's fine to invest. Let's say you want to invest in India or US or in Singapore, wherever it is. Right. So now that we're taking some questions, so we've got some questions between. So there is a question here from KKK. KKK, I believe she's from Malaysia as well. She asks, what are the differences between Ticker and Frost? So because there is another upcoming app there that has to do with investing as well. So what's the difference between Ticker and Frost?
I'm actually meeting with the founder of Frost tomorrow. It is a little different platform. So what Ticker does, it looks at all the financials of a business, or the most important financials, to determine the overall financial health. What Frost does is it aggregates information from it looks like analysts. I don't know if they're popular analysts, but I'll learn more tomorrow. But it's really taking the opinions of others. So you're kind of relying on other gurus, which is fine. You'd have to look into each analyst to see what their track record is. But Ticker really cuts through all emotion, all human interaction, and gets right to the math part of investing and does all that heavy lifting for you.
Yeah, we Casey also has a another. I saw your comment in lieu for Frost. I'm most likely going to grab Frost as well. So I think maybe Casey might be having a role in the stock market recently. Right. So
Sure.
so just to reiterate what Sean has said, Ticker works based on some algorithm that calculates whether the the stock is on sale or not, and it has to have at least of a margin of 50%, right? Margin of safety of 50% before it actually goes on sale, right? So whereas Frost, it's more I have not tested it out myself, but based on just surface information that I know, is that it is based on analysts sort of suggestions, right?
Yep, exactly.
Right. So Casey also has another comment in here, right? Another compliment for Sean, right? Is that I really love the thicker value investing methodologies for M's. Margin of safety, meaning moat and management, right?
Yep.
So he has
Thank you.
another comment in here. The potential issue I have with Frost is that Frost may not have the stocks for Malaysian market because it depends on market
Mm,
and analyst reports, right? So because compared to, let's say, the US stock market, then some analysts may only work at the bigger
right.
stock markets rather than the smaller stock market. So if you are in the Malaysian stock market where it may not be as popular as the US stock market, then you may not have as much information that is presented from Frost itself. That could be a potential issue, I would say, right? Otherwise, I don't see much questions and comments coming in. Is there anything else that you'd like to share with us, Sean?
I'd say if anybody's interested in getting started, it's all about confidence. You get in, start small, and over time, as you continue to use Ticker and use whatever broker you go forward with to buy and sell your stocks, your confidence will increase. It's a good feeling. You just got to be patient.
So I think that's a good comment, right? Regarding the brokers as well. Do you have any recommended? Because I think a
Mhm.
lot of people in the audience as well, they may be like myself, where we have
Mhm.
never got started on investing at all, and we probably want to jump in right now. And is there any broker that you
Yep.
recommend? Let's say for the U.S. stock market.
Yes, I'll break down US and then as well as anybody outside the US. So in the US, I do recommend TD Ameritrade and E-Trade. I use TD Ameritrade. These are brokers, essentially brokers where you connect your bank account to the broker where you can buy and sell your stock. So Ticker does not do that. We're not a broker. We're a screener. But those are the two platforms I recommend in the US. Outside the US, I recommend Interactive Brokers and First Trade. And on our Ticker, where you go to tips to get started, you will see a brokers button there that will allow you can see the brokers, you could test them out there. But Interactive Brokers, I believe, has a small fee to buy and sell a stock, whereas First Trade, depending on where you're located, it's free commission. So it's nice when you can find a broker that's got free commissions.
Right. So, I have a question as well. It has to do with options trading.
Mhm.
It's not really about investing, but it can be because options trading can be a passive
Right.
method to make money as well, which is what my business partner actually is very involved in, right? So I was wondering because his method is actually to purchase options, and he's actually the one selling the options away, right,
Mhm.
to options buyers, right? So I don't remember the term exactly, but I think that you might have a better idea. Do you recommend getting into that as well? Because I do know that you can actually you can actually hold a stock and sell options on it as well, right? Would you recommend something like that, and maybe some resources that we can also get into if we want to
Sure.
do something a little bit more complex with our investment strategy?
So there is one option strategy I recommend, which is called a covered call. And I'll give you guys a quick background here. I started showing interest in options about 3 years ago, and I said, you know what, I want to take $5,000 and I want to just test and see if I can write an algorithm of some sort to determine if I can make money consistently with options. Well, options is trading. So I came to conclusion after about a year of testing and trial and error, I ended up losing $4,500, and there you go. My philosophy didn't work. But out of all the option strategies out there, I'll list a few names here. Like there's naked puts and calls, there's iron condors, which are pretty complex. But the one strategy that is really safe and kind of what you just described there is a covered call. And I'll quickly describe this and how you can make passive income with a covered call. What you do is you buy 100 shares. One options contract is 100 shares. You buy 100 shares of any stock you want, and then you sell a covered call against it. And what this means is, I'll use round numbers here. Let's say you buy stock at $100. You sell a covered call at 105. So it's higher than the share price. That's called your strike price. So anyway, if the share price goes to 105, you sell all 100 shares, which you made money. But if you don't hit 105 within a term of like 30 days, you don't hit it, you would take your premium. In covered calls, you earn a premium for holding that stock. And the premium, depending on how many stocks you own, it could be a few $100s on up to a few thousand, but you can create passive income that way. But in other words, no matter if a stock goes up or down with a covered call, you make money. The negative is the bigger portfolio you have, you're going to pay taxes on your gains. You'll still have gains, but you're paying taxes. So there is a downside to it, but that is the only strategy, is selling covered calls. As far as a resource to get access to it, I've watched the guys on Skyview Trading on YouTube, I think provide good content. There's a few other I'm not thinking off the top of my head. Clay Trader, you could look him up. I've talked to him. I've been on his podcast before. Really nice guy. So I think those are two good locations to learn about covered calls, but be careful. Most option strategies, you can lose a lot of money. It can be really dangerous, but selling covered calls is safe.
So what covered call is, I think it can work in hand with ticker, right? Because you purchase the stock, so you are covered in a way. You can either be covered by the stock that you own, or also your cash on hand, right? That's what I heard. So we can actually purchase the stock, and as long as the stock doesn't the stock price doesn't rise too high too quickly or dip too quickly, we will be able to make money on top of the stock value that we already have, something like that, right?
Correct.
Yep.
Yeah. What you described, that's a covered call.
Yep. I do have some idea, but I'm not an expert yet, right?
Sure.
Yeah. So we have a lot of comments that started to flow in very quickly. We have Casey has another compliment about you guys again. Go grab ticker if you have not gotten it, so that you can use it to make some money via investment, right? I highly I already got a good experience. I already made the multiple times of the investment that I've already put into ticker itself, right? So I mean, it's not me, but my wife, right? So but it's still, the money stays in the family, right? So do you invest or recommend investing in Bitcoin, Sean?
Crypto. Okay. So here my opinions on crypto. Crypto falls in the category of gambling, because you don't know which coin is really going to take off, which is going to be the long term. Another thing to think about is a digital coin, a crypto coin, it's not a business. A business, you have financial statements, you can see the history, you can see where a business is going essentially, but crypto, you can't. So I like building wealth through investing. I look at crypto as, let's say you're somebody who you like to go to a casino. Nothing wrong with that. You can invest in it for fun, but just set expectations. The probability of making money is really, really low. And
it's a little bit about like speculating, right? I mean,
correct.
I think it's highly speculative, and at the same time, it is based on the market demand. So and the perception of the demand is always changing so quickly. So it's very the pricing, is so fluid. Within a week, you could lose like 70% of your portfolio, right? Which is pretty scary. So I can't deal with that myself.
No, it's not reliable.
Yeah. So do you? But just another follow-up questions on crypto, right? Because a lot of companies are actually raising money via ICO, right? So
Right.
instead of the stock market itself, they launch their own coin and people invest into the coin itself. In some way, it is kind of like a business as that is sort of backed by a business as well for some of these crypto. Do you do would you still recommend not to go into it until a couple of years later, maybe when everything with all these ICOs and coin exchanges, it becomes a little bit more mature for us?
I still don't see whatever. I can tell you this, some form, this is my belief, this is not, I don't have data to really back this up, but some cryptocurrency will be used around the globe. Like most countries will interact and purchase it. Like I do believe there will be something like that. So there's no doubt that it will be there. But the question is, which coin will it be? And for that, that is speculative. I'm not even going to play that. And with businesses, as they invest and use coins, I don't care. If they want to get involved in a coin, fine, but I do not make any buying or selling decisions with my investments based on whatever they do with crypto. I will say this. Here's a good thing to keep in mind when you invest in stocks. This goes back to the 1850s. In the US, we had the gold rush, and all these people were rushing out to California to make their millions on gold. The people who became millionaires or became rich during the gold rush were not the people mining gold. It was the people selling pickaxes and shovels, as well as those who sold jeans. Levi's, if you guys are familiar with the brand, Levi's jeans came out because prior to that, khakis were the pants and they would break apart. They were not durable. So you want to look at businesses that they are not the trend. They support the trend no matter how it does. And one business that does that with crypto these days is actually Coinbase. Coinbase is a new IPO. It's not quite in ticker yet, but I was looking at the financial statements and I saw these trends, and this is not a buy recommendation by any means, but I've seen the trends of the revenue as well as the income, the EPS, on a very surface level. And I'm like, okay, this one has my attention. It speaks to that pickaxes and shovels play. It's supporting the trend, no matter if that trend is hot or not. So that's my opinion. If you get interested in crypto, look at a company like Coinbase.
Right? Because there is a lot of hype going on with the crypto, so there's a lot of trading that's going on right now. So I guess Coinbase is they are selling the shovel and pickaxes. Just a fun fact, right? We call California in Chinese, right? We call it Jiujingsan. It means like the old gold mountain. It literally translates to the old gold mountain, right? That's what we call California in Chinese. Right. So we have another question. Okay, let's follow up with the Bitcoin question because we've got another one that comes in. Do you see Bitcoin as something that is inevitable overtaking the world as part of monetary regime decentralization?
I don't know if it's going to be Bitcoin, but some coin will. It will be global. I do see us going that way as the world there will be some form of currency. I've heard people speculate that Bitcoin, because it has limited amount of coins, it probably won't be that, because there are other people thinking about this too. Like there will be some coin. Who's going to be it though? So that's the question.
And we have a question on Forex as well. I believe this question is probably asked by VJ because we can't see his name in here. Do you have any plan to include Forex?
At this point, Forex, foreign exchange trading, it has not been on our roadmap. That falls in the more trading category. We are exploring the option with our audience to include charting tools like the MACD and stochastic charts and whatnot. I won't go into details what those are, but to kind of support traders if they want to use the platform. So maybe Forex, if we get a lot of demand, we may add it. But I'll tell you this, we probably won't try to write some kind of algorithm for trading. It's like we'll bring in the data and you can do what you want with it. But we were able to write something for investing because it's a lot easier because you can see where stocks are going over the long term, but short term, it's pretty much impossible. Long answer there to the Forex question.
How about your personal experience with Forex?
I don't, but I did interview a guy by the name of Clayton Allen on one of my podcasts. This goes back, 6 to 9 months ago. Really good episode. He talks about the truth with Forex, and it is a lot of work, and most people do lose money in it. He's done all right for himself, but does
the Forex method does that fall into a much more passive method of growing your income? No.
Absolutely not. You are working for a paycheck. You are working for money. Money's not, it's not investing where money's working for you. I like it when money works for me.
Same here, right? So we have a question over here is, I am a beginner. This is asked by Tracy, right? I am a beginner and trying to learn about stocks. What is your advice for newbie like this, and how Ticker can help smoother the learning curve? Also, what is the minimum amount to kickstart? Thanks. So I think Sean has mentioned it earlier in the webinar itself, is that there are educational materials that is provided free on Ticker itself already, and also you should start between, I think, 500 to 5,000, right? Maybe Sean could elaborate on that.
Absolutely. And I just wanted to drop a line here. If that value 2 is that coupon code, if you guys are interested, is that lifetime discount 20%. So maybe drop that in the chat. But with getting started, yes, ticker.com. It's got a ton of free content. And if you click on the education tab up top, that actually is the best place to start. And there's the onboarding sequence, which is sent to you via email if you join, but you can look at all the free content right now. And that is the actual best place to start. And as far as a dollar amount, one of those actual onboarding sequences or one of those articles does talk about start with $1,000. I did talk about you can start with less, you could start with 100, but the idea there is to start small and just allow yourself to gain some confidence as you first get started.
Yeah. So I have sent the discount code as well, just to refresh everyone again. The discount code is value2, and the link is in the comment. You can and of course, those who are watching the replay of this webinar, the link will be in the video description, so you can click on that and apply this discount code. And Sean, could you share with us again when the discount code is going to be expiring?
Yep, in 2 weeks, so September 15th. So you have until then to take advantage of that coupon code. And then when you apply it, the discount is applied every month, or if you go with the annual plan, every year. It's not a limited duration. It's a forever discount.
Awesome. So just maybe one or two more questions from me would be,
Sure.
What would be the roadmap of Ticker, right? Like maybe what can we be seeing that is enhanced in the Ticker platform itself within the next 6 to 8 months or so?
Absolutely. So one of the new features we're working on is a portfolio tracker feature where you can enter all your actual stocks when you bought those stocks, if you paid any kind of commission on them or whatever broker you use, but it tracks the performance of those stocks over time, like month to month, year to year, and then it compares them against like a benchmark like the S&P 500. So that way you guys can use Ticker as a tracking tool. We're also adding a portfolio simulator. So you could say like, hey, let's say you bought 100 shares of Facebook back in 2010. What would that look like today compared to buying 100 shares of like an index fund like the S&P 500? So you can see that difference.
Wow.
So that'll be fun. We're adding a feature called the 4M analysis, which allows you to, as I mentioned earlier, is Ticker does all the math for you, but as an investor, you want to look past the numbers as well and look at the 4Ms. Well, this is a guide on each stock. It will actually automate some of those steps for you and make it teaches you to be what we use this phrase a lot, don't just be a stock investor, be a real investor. And it teaches you to do that. So we're looking forward to that.
So we can actually, let's say under the management tab, we will be able to see better data about the management team, something like that.
We're going to work on adding that. That's aside from the 4M sheet, but it'll allow you to like come up with an overall score or grade to really prove your confidence to move forward with an investment. I won't explain too much here, but when you see it go live, I'll do like a demo video. And for those of you who are new, do check out the YouTube channel. We've got a lot of helpful guides that get started. And then I do also full videos on a 4M analysis. They can be like 45 minutes to an hour. As we introduce this new 4M feature to Ticker, it's going to be a lot faster. And I can't wait for that myself. So,
awesome. I've just sent your YouTube channel into the comments as well. So those of you who are watching this, you can go click on the link and subscribe to the Ticker's YouTube channel. I have just subscribed myself as well, right? So we've got 161 subscribers right now, right? So
all right.
So yeah, do spread the word about the about Ticker as well to help them grow, right? I think those are really exciting updates, especially for myself. I am a curious person, right? I like to understand everything, and being able to give me additional data just not just the numbers that is presented. I think that is an amazing idea that you have. And also, if I can put in a stock and see like the if I were to invest 10 years ago and right now, how much would that money be? I think that would be really interesting as well. But on the feature that you mentioned about the portfolio tracker, how does that work? Do we have to manually enter fill up the form to track these stocks that we have purchased, or will that possibly be maybe linked to the broker that we use, and then when we purchase stocks, it's automatically synced with the Ticker platform and we'll be able to track from there?
We will have this, so it's manual first. We'll also have the ability. I got to talk to my team, my engineering team, see if we can do like a CSV upload. But I have thought about that, and I love your ideas to connect with certain brokers, and that way it pulls your portfolio right over. That's the ultimate step. So we won't be there right away, but we'll definitely explore that. And Ticker is one of those tools. Like, we're going to keep making this better. So more features, more ways to make it more efficient, easier to use. It's evolving.
People who know me, I'm a automation maniac, right? So
yes,
right. So if I can, have like a API integration, and I just purchase stocks and it goes in, and it's synced with Ticker, I think that would be amazing, right? Otherwise, I don't see any other questions coming in, except for Casey, who has probably been on this 90-minute stream that we have already. Thank you, Casey, for being staying throughout the webinar. Right, he says a great webinar. Thanks, Henry and Sean Tapper. Right, thanks so much for being here as well. And that's all I have. Any last word from you, Sean, before we close this off?
That's it. I just want to say thanks a lot for inviting me on, and thanks for the great questions, everybody. And Casey, good to see you again.
Yep. Just let me send the link for Ticker again. into the comments. So if any of you who want to test out Ticker itself, you have a free plan. Am I right? You have a free trial.
Yep.
Right, so I'm just going to send the link in here. So if any of you want to test it out and try it out for yourself, the link is in the comments. You can click on it, try out Thicker, and see if, and then if you feel that is a good platform for you, there is a discount code that's going to be ending on the 15th of September. The code is value2, and you get 20% lifetime discount. Is that it?
20%. Yep.
Right?
Lifetime discount.
20% lifetime discount. And we may not even know if Ticker is going to be increasing their prices later as well, as they are adding more features. The cost of maintaining and the cost of developing more features. Then maybe Sean has to even increase the prices down the road as well, right? So if you want to get in on one of, I would say probably because it has been working out for me, so probably like the one of the best stock picker platform. Be sure to get in early so that you can take advantage of the discount that you get as a early bird, right? I would say, right? And that's all I have. I'll see everyone in the next episode of Decisive Learnings. And lastly, thanks Sean for being here. Right? Bye bye, everyone.
Yep.